So the bank was broken. You had the system, and of course you brought in a great team that was able to execute on those reforms, and you turned the bank around. And then the second part of the book, I really read this book as two books actually. The second book is really about the sale of this to Ping An Insurance, which later merged it to become Ping An Bank. Again, a very long and tortuous process. I counted another 10 stop-goes and roadblocks. There were moments when you thought the deal couldn't go through, but eventually you prevailed. And at the end of the experience, Newbridge made something like 14 times.
Yes, we did make a lot of money.
Right, a return on your initial investment. So well done. Now, question for you is, you have since done a lot of deals. Why this particular one? Apart from the fact that you are the only first and only foreign firm who ever actually controlled a Chinese bank, was there anything about the financing, the deal structure itself that stood out to you as not particularly noteworthy or innovative?
That's a very good question. I think the first thing is, it's just a very interesting story. We make investments all the time. Sometimes a deal is rather boring. You see a target, you go in there and you wanted to do a deal, and then you do a deal, and that was it. For example, we just a few years ago invested $250 million into Universal Studios Japan. And in 3 years, we made 5 times our money, and we got out. And the management was very independent, and there was not much involvement from our part. We were a passive investor, so there's not much to talk about, other than the fact that our money was used to build a Harry Potter attraction, which increased the traffic of that theme park, right? But this one is a very, as you said, complicated story. And it has actually 2 parts. The first part is to take over the bank. Second is to turn it around. The third is to exit from the bank. And it's a complete process of a private equity transaction from beginning to the end, from entry to exit. And it makes a very interesting story. And there is a dearth of literature on private equity, even though there's a lot of interest in this particular business or particular industry. If you look at this industry, the history is quite short. It started really in late 1980s. But today, in the United States, for example, private equity controls twice as many firms as listed on the public market. So that's how big this industry is. And yet, there's almost no book talking about private equity transaction from beginning to the end. My second book, Money Games, is the first book in this regard, a story about the complete cycle of private equity investment. And this is the second one, which is an interesting read.
Right. And there's certainly a lot for those of you who are interested in finance. There's certainly a lot of very interesting financial concepts in here, financial instruments. One of the things that I was particularly impressed with was the idea, the proposal by a earlier suitor for the bank, in which they would buy out the LPs of Newbridge Capital. That was a masterstroke.
Yes.
Very interesting.
Indeed. Even though there were many financial concepts in the book, I tried to tell the story so that any layman can understand the concepts. So I tried to write in plain layman language. The audience may not know that LP is limited partner. Limited partner is the investor of ours. We are referred to as general partner, and our investors are referred to as limited partner. And general partner makes a decision doing investments, and limited partners are passive. But the proposal you refer to involving somebody trying to buy the interest of limited partners so they become our limited partner without us having to make a decision whether or not to sell the bank.
Yes, that was a very clever move. So, like I said, full of very interesting details. A lot of very exact details of time and place and numbers and events and the sequence of events. You took a lot of notes. Do you keep a journal?
Well, I do take some notes. I also remember some key dates and key numbers. For example, we closed the deal on December 30th, 2004. And I first got into private equity business. I made the decision to do it on October 23rd, 1997. That was a day when Hang Seng Index dropped 16% in one day during the Asian financial crisis of 1997. And when we first took over the bank, the capital ratio, which is measure of how strong the balance sheet is for a bank, was 2.3%, whereas the regulatory requirement was minimum 8%, so we were undercapitalized. The bad loan ratio for a good bank, it should be less than 1%. For that bank was 11.4%. Nominal, reported, the actual was twice as bad. So all these key things I remember very clearly.
Right. So since you've been such an active deal maker and there's a long list of deals that you've done with PAG, I presume you've been taking notes and keeping journal of all these deals?
Sometimes I do, but my notes are usually very brief.
Right. Well, we can expect
but
more
it helps
books.
me to remember things.
Right. We can expect more books on some of your more recent deals?
I don't have any plans after this book.
Right. But since you were you taught at Wharton School, so I'm going to run some, I guess, learnable moments past you on some of the lessons I learned from reading this book. Number one, avoid any deal structure that would require policy breakthroughs or setting precedents. Very important in China.
Very important. At the time, in the early 2000s, China was going through a phase of economic reforms led by Zhu Rongji, whose boss, of course, was Jiang Zemin. And that administration was very much responsible for many of the major reforms that took place in China in early 2000. You remember in 2001, China joined the WTO, the World Trade Organization. And in early 2000, all the state-owned banks were cleaned up and brought in foreign investors and went public, one after another. So it was a special period of time when I forgot your question as I was talking about the background.
One of the learnable moments is avoid any deal structure that would require precedents.
So at that time, there was no precedent that a foreign investor took over control of a nationwide bank. And so it would require, and there was also a rule that foreign investors couldn't buy stocks in A-share market. You know, foreign investors were off limit from A-share markets. And therefore, it required policy breakthrough for us to get the approval to buy control of a nationwide bank. But when we were trying to sell, you will find in the book that it took a very long time for approval to be given. When we were selling the bank, of course, we wanted to do it as quickly as possible. If any terms require regulatory approval when there were no rules, so it required regulatory breakthrough, policy breakthrough, it will hold up the entire process. And therefore, the buyer, that is Peter Ma of Ping An, and I agreed that we should not seek any policy breakthroughs.
Right. So this would be an important lesson for anybody doing deals in China. Second lesson, there's always tomorrow, there's always a new wrinkle, and people would always want to squeeze more from the other side using every bit of time they were given.
Yes. That's why for in deal business, a deadline is critically important. There has to be a deadline. With the deadline, then you have all the incentive to get the deal done as quickly as possible. Without deadline, you can drag on for a very long time,
right.
because there's always a new wrinkle. You can always improve things.
Right.
For example, I wrote 3 books so far, and writing books, there's no deadline. There's no pressure. I can take years to write a book, but when I do deals, I have to be very focused. I have to be able to do it around the clock. I have to close the deal within a very short period of time.
Well, unfortunately, in the
With
news
the
business, we have very firm deadlines.
You have deadlines as well, yes.
No deal was final until it was final, until
Yes.
the signature is on the paper.
Yes.
It's not just about doing the deal. In like you said, private equity is all about improving the business. So once the deal is concluded, the hard work begins to turn around the franchise, to build the brand, to put value back into the business.
Yes. That's how we create value. That's how we make money. For a private equity buyout firm, we always have an operations team that is very experienced veterans of management professionals. So they go into the company and help the management to improve the value, improve the operation of the company. And that's how we create value. It's not to buy low and sell high. That is too simple. Anybody can do it. And the market is competitive. The market is efficient. How can you buy low? Other people cannot buy low, right? That's not the way to make money.
Right.
For private equity, the way to make money is to be able to improve the operation, to add value to the target, and that's how you create value.
And the final lesson, always keep flowers for family celebrations. Bright red tomatoes will not do.
Yes,
Right.
I went to my child's high school graduation from the signing ceremony of this particular deal. And then I got there without flowers, so I bought some tomatoes instead.
Creative thinking. But for anybody interested in high finance, this is definitely a book to read. Money Machine, coming out in
7th next month, February the 7th.
February the 7th.
But it's available for
Wiley.
pre-order on Amazon. Actually, if you order now, then you should receive it during the regular delivery time.